Very good afternoon, friends. This is our second video in our Budget 2023 series on GST, customs and corporate taxes. Tomorrow we would be coming out immediately after the Finance Minister's speech on the preliminary analysis on Budget 2023 proposals, and on 2nd of February at 9 a.m. sharp, we would have our webinar on the detailed analysis of the proposals of Budget 2023. So, under GST, customs and corporate taxes, we would discuss 10 expected proposals to be made tomorrow. First, under GST, it is expected that proviso to section 12 subsection 8 of the IGST Act would be deleted. Now, what is this proviso to 12.8? We all know that from 1st of October 2022, GST on outbound freight was made applicable, withdrawing the earlier exemption. However, the place of supply in case of outbound freight, where the material travels out of India, was considered to be the place outside India as per proviso to subsection 8 of section 12 of the IGST Act. Therefore, the suppliers of these services like courier, mails or transportation of the goods where it is by vessel, the shipping lines, when they raise the invoices, they provide the place of supply as a foreign country or other territory. Now, in case the place of supply was foreign country, it was clarified by this circular issued by the CBIC in January 2023 that ITC would be available to the recipient of the service who is in India itself. However, in case of other territory place of supply, there is no such clarification and the input tax credit continues to be blocked. Well, these anomalies are expected to be removed by deletion of proviso to section 12 subsection 8, wherein after the deletion of this proviso, the place of supply would be the place of recipient, in our example in India itself. Second amendment expected under GST is that the GST law is expected to be decriminalized. 3 offences under 132(1) of the CGST Act are expected to be removed. First, obstruction of officer on duty, falsifying or providing false information, and not submitting any information as required to by the officers. These are expected to be removed from 132(1), or certain decriminalization provisions are expected to be introduced in 132(1) of the CGST Act. Also, the threshold limit of the criminal offences under 132(1) as of now is 1 crore. That is, in case an offence is more than 1 crore rupees, it is a criminal offence under GST. Those offences which are listed under 132(1), of course. Now that limit is expected to go up to 2 crore rupees, other than supply of fake invoices. So, for supply of fake invoices without corresponding supply of goods or services, the threshold limit for criminalization of such offences is still expected to be 1 crore only. Formation of GST tribunals is long due. Well, in this budget, it was expected that the provision for GST tribunals would be amended and GST tribunals would see the light of the day. However, it is not expected now because there is a discussion and whether the GST tribunals would be state tribunals or national level tribunals, and subject to finalization of the discussions in this budget, it is not expected now that the provision for GST tribunals would be amended to give effect to the formation of the GST tribunals very soon. As far as customs is concerned, there is an expectation of a settlement of disputes scheme under customs, which is long due. In central excise, service tax, even the state governments in VAT regime have come out with settlement of dispute scheme, but for customs it is long due. Well, exporters are expected to be happy post this budget, because it is expected that the allocation for remission of duties and taxes on export product scheme, that is RoDTEP scheme, is set to increase in this budget 2023. Already we have seen on certain products like tea, the RoDTEP rates have been increased very recently. However, the importers of non-essential items like steel, plastics and specifically electronic goods may not be happy with this budget, because for non-essential items the import duty may be increased to promote Make in India and to balance or rationalize the current account deficit which is on the increase. Specifically for electronic goods, it is seen that the imports have doubled over the last year, and therefore import duty may be increased to restrict the spurge in the imports of electronic items and certain other non-essential items. The SEZ bill was introduced in the last budget, and this budget may see it firming up further to amend the SEZ law and to promote SEZs. As far as corporate taxes are concerned, there are very many demands of corporate India from the finance minister. Here we would discuss three very important demands as far as corporate taxes are concerned, and most important among them is the treatment of discounts for the purpose of section 194 capital R. Now, it was clarified by circular 12/2022 that sales discounts, cash discounts and rebates would not be subject to TDS under section 194 capital R. However, these discounts still continue to be taxable as benefits or perquisites in the hands of the recipient of the discounts. Further, certain field officers are taking a view that post-sale discounts would still be considered to be as benefits or perquisites. This issue needs to be resolved, and it is expected that the budget would amend 194R and possibly bring in a definition of the word benefits or perquisites on which the entire TDS under 194R and the subsequent taxation under 28(4) of the Income Tax Act rests. Well, TDS and TCS certificates are required to be maintained for a period of 3 years to 10 years till the assessments are complete, whereas most of the assessing officers rely on Form 26AS now. Maintaining these TDS, TCS certificates not only for corporate taxpayers but even for individual taxpayers is a big hardship, and it is expected that Form 26AS with a more safe option so that nobody can amend that Form 26AS may be introduced, and maybe the TDS and TCS certificate maintenance provisions may be relaxed or completely scrapped off. Make in India requires a boost, and to boost Make in India, it is expected that there would be certain incentives as far as deduction on brand building expenditure or on expenditure for research and development expenditures are concerned. So, it is expected that certain deductions or weighted deductions for brand building and R&D expenditure would be introduced in this budget. Well, the demands are very many, friends. Tomorrow we shall meet again and see what all demands and expectations which we have detailed in the last two videos are met, and after the announcement of the budget proposals of Finance Minister, tomorrow we will come out with another video. So stay tuned. Please do like, share and subscribe to this channel for maximum dissemination of knowledge. Thank you very much.